why and how I use Fibonacci to help me sometimes with making my trade decisions. Well, some would tell you that the Fib is just a bias tool, but really anything you use has a little bit of bias to it, right? Because you're using it to try and find something that may or may not be there, but you want it to be. Could be a thing. So this morning here on AMD took a few trades, but I want to show you what I was doing with the fib levels here. So this is our opening candle on the 2-minute chart, and these blue lines here are support resistant areas I have previously marked up. So they've just been hanging out for several days here. Anyway, so we have our candle here, place it off our high and our low, and over here on this side is what you're looking for. These numbers here tell you we're at a 60% pullback, a 50% pullback, a 75%-ish pullback, etc. So what it does is you see the 0.618, and then it gives you the price that the ticker would be at. And what this tells you is if we pull back to here, like we did right here, and you're looking to enter for more downside continuation, which is how we drew up this fib, this is a good safe spot to potentially enter. It gives you what a lot of people say is about a 60% discount on what you're paying versus where someone else paid, if you're playing options. So it doesn't always line up, and I don't always take them. But this one was a good clear lineup. At the 0.618, we popped up, and we also hit the 20 EMA. It didn't play out very smoothly, but it still played out. This would have been, you would have had to done a real quick scalp on this one to make some money on contracts with it. I guess not too quick, but still, you know, we did come back down. What is that, about 50 cents? So, yeah, you could have had a good little play there this morning at the open. But you see here, we came up, and then we broke our high right here. So now you need to redraw your fib. So now what I do is I go off that low from the opening candle, and when we broke the high, you know, that's where I would have put it on this first candle. Second candle came in, third candle came in and broke it. We're still pushing up, so take the line, move it up. Next candle came in, same thing, take it, push it up, and then push it up to that top. So now that we're drawing the fib from the bottom up, we're looking for it to have upward continuation. We came through, broke the highs, kept pushing, so what we're waiting on is a pullback to go long on. And that happened right here. Almost had a little double bottom, pretty close, and right at the 0.618. So I actually entered on this level here. I took some calls, and my risk would have been this line here, the 0.786. So I entered here and wrote it up, and I exited somewhere in this area here. I don't quite remember, but it played out well. But it didn't continue. We didn't go in and put in a new high. That was it. That was a lower high right there. And we started to curve around. So now what you can do is take that fib and pull it back down. If you drop from the top down to here, where it rejected was almost the 0.618. Got real close. So why the 0.618? It's a better place to go in if you're a newbie to all of it. It's a little bit safer risk point. Lower your risk. Does potentially mean you'll miss out on some plays because it may not get to the 0.618. A lot of times the option or the stock bounces off the 0.5 here and keeps going. But use that 0.618 as a better chance for a reversal with lower risk on your side. And there are some people that will play the 0.618 and their risk will be here at the 0.786. Some people will use this line to add more to their position if they feel it's going to keep going in the direction that they're playing. So they might take a small size here, and if it gets up to here, add a couple more, and they'll use this high here, the high of day or the high of whatever mark they're playing, as their risk. Sometimes I'll only play the 0.786 if I'm a little too unsure or really want to reduce my risk, but oftentimes I'll also play the 0.5, the 50% pullback. If I play the 0.786, then the 1.1 right here will be my risk, because I have seen it countless times come up and just go over the line here and then continue selling off. And then you stuck to your rules and you cut it, and now you're in a bad mood the rest of the day. And let's just look at this fib a couple more times here, see how it's playing out. So we just drew it from top to bottom to catch this move. So now we're still going down. Let's see, did it give us another spot to re-enter off of here? Well, yes and no. If you're playing the 0.5, like I do, then it did. But if you're waiting for that 0.6, then you'd miss that big move right there. You didn't have any risk on the table, but you also had no reward. We can draw it again. Come off this high, down to here, nothing. Just keep pulling it down as it keeps making lows, nothing. Keep pulling it down as it keeps making lows. So at this point, you've come off this high all the way down to here, and it never even gave you a 0.5 touch. I mean, that's not technically a touch, pretty close. But at this point, I mean, coming all the way up to a 0.618 and looking for a rejection isn't the way to go about it. Because after it's gone through half the day and we're starting to put in a lower high, or a higher low, you want to start thinking about push in the other direction, going opposite of where we have been. But anyway, that's a real quick rundown. Maybe later I'll do a much more in-depth video on the FIBS, but that's how I use them. Don't always use them, but when they line up, especially if they line up with a FIB and a flag and they're in the vicinity of my EMAs, it just adds more conviction to the trade. I don't follow the FIBs blindly. You need to make sure everything else kind of getting together in a larger view of the field. Anyway, we can do a more in-depth video later, but just real quick rundown.